A couple of weeks ago, when the price was down here roughly, I said that if it would trade below 78, that was probably going to turn bullish. The reason for that is that at the time, the 200-day moving average was supporting price as well. We had the fear and greed index being at rock bottom, and a lot of traders were betting on lower prices. So they were betting on a slide down to those sort of 72-ish, 73-ish, which is the breakup point here. And normally when people start to bet on lower prices, we tend not to get lower prices. And this is exactly what happened here. As well, what has happened since then is that the very index, the US Flash Services PMI index that dropped below 50 and caused stock markets and crypto to move to the downside, that index just came out with the latest reading being really solid, closer to 54, telling us that the US service sector is doing really well. And at the same time as well, now Trump has backed off from trade wars and instead focusing on real wars. Um, so that's also good from an investor perspective because it's less likely he's going to come with something. Rather, he will probably let the stock markets go up a bit before pushing and refocusing on trade wars. Now, does this mean that we're sort of good to go? Not necessarily. I think it might still take a little bit more time before we have like a proper return to the bull trend. Buying here on a dip, of course, there's nothing wrong with it, buying around here and even buying at these levels down here. The problem though is that when we need to be aware that when we're buying dips, that sometimes sort of we go down and then we go up and then we go down and then we go up and then we go down. So we can revisit the same level many times. And if we revisit this levels a few times more, that would not be unsurprising. And it takes time buying these dips, particularly now as the situation is quite different compared with before. But realistically, we will have more good news for the crypto market. I do think we're going to go to the upside. So when will I start to sort of relax a little bit more? When do I think this is going to be much easier trading? Well, for now, we are capped by that trend line, and that trend line is roughly at 91, and then we have an actual high here at 94 point, let's call it 95. And I think we probably are going to do something like this. We're probably going to go up here, and then you will probably see a lot of crypto influencers and sort of the mood be really bullish and be like, oh, we're going to go all the way to the all-time high. And then probably that's when we're going to peak. And then we start to chase the downside. And this is not bad, really. I think this is okay because many times the trend sort of stops being bearish because that's what would happen here, and then it turns neutral, and then turns bullish. There's sometimes, of course, when the market is really, really bullish, where you just have a trend break. I can't really see anything here when the market just goes to the upside. But I do remember here very well here from March 2024 all the way until November. Like that period was very long, and people were very worried because you're supposed to have the Bitcoin halving event, and that's supposed to drive prices to the upside. The issue here, though, is that kicked off here already. So people started to position themselves in October, November of 2023 ahead of the halving that they knew was going to come. And then sort of the market just took a big break. But this resulted ultimately into a very tight breakout here where you could, with the help of the news that Trump had won, have an extremely good risk to reward ratio. And I think the same thing is going to happen here. Another reason as well for that is because if you look at the indices, so yes, this is the Nasdaq 100. We spent some time here. Again, the data has been good, and we're now pushing to the upside. Now, I'm personally not going to go out and short this, but it would be fair to assume a little bit of rejection, especially around sort of 20,700 ish, because this acted as support and now likely will act as resistance. So this can push a bit higher here as well. This is the 200-day moving average. And then probably from here, probably turn a little bit lower. And then when we have breached whatever that swing high is, that's probably going to be the same time when we have a breach of the swing high here. And at that time, like if you look at it, if you look, this is Ethereum. I mean, Ethereum, this is a very, very steep downtrend. very steep downtrend. You have one trend line like that, and then you have this one that goes like this, and then you have probably you can draw another one here that has been broken already. But you see, we're working with many different levels, and we need to break over major levels. And again, let this push up a bit, let this probe here, let this spend some time here, and then hopefully at one point, we'll have something easy to trade, maybe like this little range here. As you can see, very easy to trade the break here, and as well as I just showed you before in Bitcoin. And that brings a lot of positives in terms of stress, in terms of risk reward ratios as well, that can be tightened up. So don't feel that you're missing out, because many times, especially if you've been buying on that dip there, if you buy on that dip, because you have such a huge downside potential, your risk to reward ratio immediately as well goes bad. Whereas if one was working with a very tight pattern and then you have a breakout, you can get some really good risk reward ratios. And because one is trading with leverage, it doesn't matter one didn't buy the dip, you can easily catch up. Very important to remember that. Okay, that concludes this educational little piece and market outlook. Let me know below what you think.